Morning, folks. Quick update on crypto and gold. I'm going to cover them together because they're kind of behaving in the same way. And I just wanted to have a look at the charts of both of them because they look a little bit similar. And there are a lot of gold bears and a lot of crypto bears around. And I'm not convinced that these are both going to go down. And in fact, I think Bitcoin looks somewhat bullish, and the same goes for gold. And I'm going to show you why on my charts. And I know this is going against what most people say, so take it with a pinch of salt. It's not trading advice. It's just what I see on the charts. Here's the Bitcoin weekly chart, and you can see we've moved up sharply from that level at around 15,500, and we broke up above this resistance here, which is a key resistance level. And in recent weeks, we've just come back down to test the top of that level there. You can see that green band I've got in place. There's also a rising trend line on this weekly chart, which we've just touched. And it also happens to be the 38.2% Fibonacci retracement of the move up from 15,500-ish. Up to about 31,000 that we reached quite recently. And on the weekly chart, there are a couple of interesting things. First of all, these two big bullish candles on the weekly chart, which dominate the charts. And then the fact that we've come back down to this previous resistance level, which is now a support line, and it's a trend line, and it's the 38.2% Fibonacci level. And we're also hovering above and about the 200 and the 20 period moving average on this weekly chart. If I just zoom in a little bit and have a look at last week's candle, that's a very bullish candle. Yes, we've got a lower high and a lower low compared to previous weeks, and there's been a fairly constant procession of lower highs and lower lows. But look at the shape of last week's candle. It's a wick low, spike low candle with a small body, fairly small upper wick, and all the time holding above this support level where the trend line, the Fibonacci, and the horizontal line is, and closing just about on or slightly above, moving into the following week, this week, the 200 and the 20 period moving averages. So I don't think that looks like a bearish sign. We do have a channel that we've got to break out of, that we're stuck in right now, kind of in the middle or slightly towards the upside of that channel. But if I just scrunch it up on the weekly chart, you can also see this familiar pattern of a bullish flag. Now this flag's a little bit too long. I don't like it when the flags get so long. We want to see a sort of a short, sharpish flag. This one's extended a little bit too long, but it's only extended as far as this rising trend line. Let's go across and have a look at the daily chart, and I've got exactly the same lines drawn in on the daily chart. You can see the same channel here on the daily chart, and once again, you can see this rejection off that support level, this green line, which is the 38.2% Fibonacci level, and this previous double top resistance level. So that's a pretty good resistance level, being a double top. And we rejected off there pretty sharply. And if we zoom in once again, we've got something that looks like a tweezer bottom here on the daily chart. It's not only a tweezer bottom, but it's also potentially a piercing pattern, followed by a big move higher, a break up through the next resistance level, that's that green line there, at around 26,200, and we've held above there for 3 days in a row now. And yesterday's candle was a nice big bullish candle again, breaking above this immediate resistance here. So overall, unless we reject sharply and break back down through this trend line, and more importantly, this level here at 24,700 or 800, that's the key level. As long as we hold above there, this looks like it's going to go higher. So I know there are a lot of Bitcoin bears out there, and some of them quite famously outspoken on YouTube, but I just don't see this in the charts. And what's also even more interesting is that despite all the problems with Binance and Coinbase and all the SEC intervention and regulations and filings and so on, Bitcoin didn't budge an inch to the downside, held up very strongly. It looks very, very firm, very secure. No panic selling, nothing like we saw before with the Sam Bankman-Fried sagas going on. That was around about here. Nothing like that whatsoever. This was the SBF move down over here, and I think over there as well, those couple of periods there. But we've seen nothing like that. So Bitcoin's holding firm, and although I'm not trading this at this stage, if I was to bet on the direction of Bitcoin, I would say firmly upwards. Targets above us? Well, we've got these Fibonacci levels in the pink and the blue and the green. That's the larger 38.2% Fibonacci level. Then we've got the 618 and the 786 and so on. And you can see how those align with previous highs and lows on these charts. So I think Bitcoin might be heading higher. I think the jury's still out on it though. Let's wait and see. If we see a dramatic crash in the stock markets, which hasn't happened yet, then that could bring Bitcoin down with it. But we haven't seen that crash in the stock markets. We've seen edging down. And actually, despite NASDAQ and S&P edging down over the last couple of days, Bitcoin's been edging higher. So with that slightly optimistic picture on Bitcoin in mind, let's have a look at gold. And I'm actually already long gold, and the reason is because we've held above, this is the day chart, we've held above this retracement level here. Let's just zoom out. Perhaps I'll put this onto a weekly chart. So there are arguments for both sides on gold. We've got a triple top, the previous two highs there at precisely the same level, and this recent high a few weeks ago at exactly that same level, at around about $2,070, slightly below that. We just fell off from there, but it's not surprising because it is a previous double top, and there's going to be some selling and resistance, and it's going to be difficult to get through there even if this market is ultimately bullish. So we expect some rejection there. It doesn't mean it's a long-term triple top. We've come back down to this 38% Fibonacci level, same as on Bitcoin actually, and previous resistance, as you can see by this band that I've drawn in here. Pretty key supply zone there, and all along here going back to 2020. So it's a really, really important zone, and I expect there will be a lot of buyers and sellers jostling for position in that exact area that we're at right now. But have a look at what happened last week. Very similar to Bitcoin. First of all, we got an upside down hammer candle. This is a few weeks ago. Then a small sort of hesitation candle. Last week, we got this dip down to $1,927. And then a sharp bounce back above this trend line, forming a wick low with a tiny real body. Generally quite a bullish looking candle. A good hold above that support. Do I think gold could go down? Yeah, sure. I think we could test further levels below us. Perhaps down to 1900, perhaps down to 1880. Into this next zone below us down here, which is also a really important supply and demand level. That would take us down into these next Fibonacci levels and below the trend line. But we've got good support going all the way down to 1810 or 20. That's this level here, and that's where the 61.8% Fibonacci is. I'm not too sure if we get there though, and I think if there are going to be buyers in this market, they'll be eager to get in now. There might be a small sense of FOMO, which could support the market at these levels. After having seen this big rally up recently, I don't think people want to be missing out on the next run up on gold. On the other hand, that sense of FOMO could also force this market down, as too many buyers get in at levels which are slightly too high. And going across to the daily chart, we can see the same thing. We did hold above that trend line for quite some time, but we just slipped beneath it. And what's slightly worrying is that despite this bullish candle last week, we didn't really manage to make headway above this rising trend line. And even though we closed above it slightly, we fell back beneath it, and we're still just below that. But we are above this wick low and above this very solid support line at 1,940. Look how many candle real bodies have based out at exactly that level. And for me, that's the level that we really don't want to break in the short term. That's $1,940. So over the next couple of days, if we can hold above 1940, that would be a very bullish sign for gold. We could expect to break back above this trend line and back into the inside of this new channel that's forming, which I can draw by just cloning that trend line beneath us like this, something like that. It's not precise. So you can see where the top of this channel is. We'd like to start by getting back inside this channel and then probing this recent high at 2070 and getting up towards the top of the channel. What is worrying as well for the bullish picture is that this failure to reach the channel top, even though it's a new channel, is called a channel failure, and it indicates weakness on the charts. So we'd like to really get back up to the top of this channel as quickly as possible and retest the top of that channel and begin to challenge the top of this channel, perhaps trade within this channel for some time to come. So we could see a move up to somewhere around, I don't know, $2,100, and then a move back down. I'd like to see a retest of this high at 2070 from the top side after having broken out, and that would offer another good opportunity for bulls to get back into this market. However, if we don't manage to get up there now, we're going to have to allow for dips down into these orange and pink zones below us, potentially even into this blue zone, which would take us into the low 1800s. And this support area here that you can see on the chart at the bottom of the channel. But for now, as long as we hold above 1,940, that's my first prize, is to hold above there, and then perhaps 1,927, this low that we saw a couple of days ago. If we can hold above there, break back inside the channel, begin to move up and challenge this recent high, and actually the all-time high, and want to be triple top and break through there, we can negate the triple top, move up towards the top of the channel, and start to see gold continue on its way upwards. Well, I hope you found that useful on gold and Bitcoin. I think they look pretty similar, and perhaps it is true that Bitcoin and gold are becoming the new buddies in this sort of flight to safety in very uncertain markets. If you enjoyed the video, please give it a thumbs up, and if you're new to the channel, consider subscribing. Take care, have a fantastic trading day.